And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. Welcome to the midweek edition. I'm Ladi Williams. First off, let's kick off your morning now with some news. Oil prices rose in early trade after industry data showed U.S. crude stockpiles fell more sharply than expected last week, highlighting supply tightness out of a looming European Union ban and G7 price cap on Russian oil. Brent crude futures gained 25 cents to $88.61 a barrel. U.S. WTI crude futures rose 35 cents to $81.30 a barrel. Both benchmark contracts rose about 1% in the previous session as United Arab Emirates, Kuwait, Iraq, and Algeria reinforced comments from Saudi Arabia's energy minister that the Organization of Petroleum Exporting Countries and Allies, together called OPEC Plus, we're not considering boosting oil output. OPEC Plus next meets to review output on December 4th. Uncertainty over how Russia will respond to plans by the group of 7 nations to cap Russian oil prices further supported the market. And the Nigeria Extractive Industries Transparency Initiative, NATI, says Nigeria earned a total of $741.48 billion in revenue from oil and gas between 1999 and 2020. The Executive Secretary of NATI, Mr. Orji Bonaya, dropped this hint in Abuja during the Stakeholders Engagement Forum in the Petroleum Industry Act. Mr. Orji says several NATI reports have led to the recovery of billions of dollars by the government from companies operating in the country. Has also had to track government spending and digitization of those revenues as well as company payment. He adds that the agency has so far conducted and published 25 cycles of reports within the period, adding that the 2021 audit report is ongoing and will be published before the end of the year. And the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, has announced that its intervention to increase the monetary policy rate is yielding results as inflation is gradually decreasing month on month. Speaking at the end of the Monetary Policy Committee meeting in Abuja, the Apex Bank governor explains that the prices of food and general household goods is experiencing a fall, as expects a further depreciation through further tightening of the rate. While announcing the launch of the new Naira slated for today, November 23rd, he explains that the January 31st date for the collection of all Naira notes still stands, and there will be any form of extension. Take a listen.
It's the last Monetary Policy Committee meeting for the year, and after 2 days of deliberation, the Central Bank Governor and members of the committee intimate Nigerians on some of its key decisions.
Let me welcome all of you.
First, the committee takes a look at how activities at the international market is affecting the Nigerian economy following the impact of the COVID-19 pandemic, the Russian-Ukraine war, and on the domestic front, insecurity, costs of public debts, increased spending, and the trend in inflationary pressures. However, the committee notes that its interventions in the last 2 months are yielding results.
On month-on-month basis, however, headline inflation decelerated to 1.24% in October 2022 from 1.36% in the preceding month, an indication that price development is responding to the bank's recent policy rate hikes.
The governor then speaks on the decisions of the Monetary Policy Committee, which will see the tightening of monetary policy rate from 15.1% to 16.5% to tame rising inflation. The committee also retained the cash reserve ratio, CRR, at 32.5%, retained the liquidity ratio at 30%. The idea is to tame inflation, especially on food prices, which is likely to be affected owing to flooding in 33 states of the Federation.
Particularly for rice or for grains such as maize, we know that we have our own strategic reserves, which we will use to moderate prices as they get more aggressive. We've been doing a strategic reserve program for almost 3 years, and it is yielding results, and we believe that that will help to moderate.
Then comes an announcement on the new Naira notes.
We will not shift any deadline. What we have done is not against the law. It is in tandem with the law. Tomorrow, which is the 23rd of November, 2022, the President has graciously accepted to unveil the new currencies, and the new currencies will be unveiled tomorrow.
The central bank is confident that its intervention will yield the desired result in the coming days.
All right, for analysis now, we have Nnamdi Iwizu, co-managing partner, Commercial Partners, joining us via Zoom. Great to have you on the program.
Yeah, it's good to be here. Thanks.
So most analysts expected a 50 to 100 basis points hike, but we got 100, even though we got 150, at the last meeting. It's quite, soft. Looking at inflation is still elevated at this time. What are your thoughts on this 100 basis points?
Well, like you said, it was expected by most analysts, and we had anticipated a slower hike or a lower hike than the last one. But we have to realize that there's a lag between when actions are taken by monetary policy authorities and when you start to see the results in the market. So we haven't felt the full effect of the last hike that they had. And globally, you will notice that central banks have also started to slow down a bit on their own hikes. We've seen the Fed, for instance, in the US show guidance that hikes might go to like 50 basis points versus 75 basis points. So it's really natural that at some point in time, you have to slow down, look at what the effect of the previous hikes would have, or wait and start to see the effect of the previous hikes on the market before you talk about whether or not you want to continue raising rates aggressively. I remember the last time they also raised CRR, which mopped up quite a lot of liquidity. They want to see how that plays out before they start to, decide whether or not they want to go more aggressive with regards to their tightening policy.
And the MPC was, obviously impressed with deceleration in inflation, on a month-on-month basis. Can we really attribute the previous hikes to this deceleration?
Well, yes. We would look at that as contributing partly to it. We can't say that's all because we know that part of the inflationary pressure has to do with, logistics issues globally, has to do with naira depreciation, has to do with, global high cost of goods everywhere. We've seen inflation in the UK at 11 and co. We've seen, which is record high, right? So we can say that, yes, the tightening definitely is contributing, but it won't be solely responsible to the slowdown in the hike. You have things like harvest, for instance, beginning to come in, which would also be partly responsible for that also. And the fact that at a point in time, consumers themselves just look at the high cost of goods and services and decide, look, we just need to slow down. We can't continue paying this. So I think the rate hike would have contributed, but definitely other factors would also have fed into that slowdown with regards to inflationary pressures.
And obviously, we know narrowing the negative real interest rate margin is of great importance right now. How do you think, we can boost investor confidence in this market?
I would say what investors like most is transparency. We still have quite a bit of an opaque system, for instance, around FX. Even same when it comes to interest rate policies and co. So, and generally government policies. So investors like to see transparency. They like to have a clear direction, with regards to where policy is going. And not just on the monetary policy side. You also have to look at the fiscal policy side. You have to look at security. So if we start to address some of those things, address security challenges, look at government spending, and then ensure that you create better transparency, in various markets, then definitely you start to see investor confidence come back. Once the environment is conducive for investors, you really don't have to give them a lot of incentives for them to come in. What they just want most times is to smell the money, see a conducive environment, see transparency, know if they come in and they need to go out, for instance, or you need to access dollars, for instance, even if you're a local manufacturer, that you know exactly what the rate is, you know that you can get it when you want to get it. So I think that transparency is key. And
obviously, we've had a lot of volatility in the forex market. Do you think this latest hike would bring some kind of stability to the FX market?
Well, honestly, I really don't think so. You might have a bit of stability, possibly in the interbank rates, but I don't think this really helps so much when it comes to the power market rate. I mean, if people were to look at how much Naira has depreciated by in the power market rates and compare that with where rates are, it still makes sense for a lot of them to rather keep their funds in dollars versus Naira. So that continues to build pressure. If you want to use interest rates to fight currency devaluation, for instance, or depreciation, what you need to do is to, increase your rates to the point where your interest rate is higher than depreciation levels. So by the time someone checks and says, okay, look, I'm going to earn 20% on the Naira, but I think that the currency might depreciate by 10% over the year, so I might as well keep my money in Naira earning 20%. But if I see that depreciation is going to be, say, 30% and my interest rate is 15% or 16%, I would rather go and buy dollars, knowing that, at the end of the day, the dollar will outperform the interest rates I can get locally.
And today, with the CBN governor did announce they'll be unveiling the new notes later today, and obviously, he did say that there will be no extension, for Nigerians that want to, deposit the old notes, into the banks. No extension, he says. What impact can we expect from this?
Well, I think what you will most probably see if you don't move the extension would be much more of a scramble by people all looking to, do the conversion. Yes, I know you said 100 days is long enough, and 100 days is a long period. But I think we also need to consider the fact that beyond people in Nigeria, you have people who are outside the country, people who might have traveled out for, say, 3, 4, 5-month courses, who don't have access to come back. You have people in certain places who, hinterlands, who don't really easily have access to the banking system, right? But I mean, the good side is the fact that they are starting earlier than December 15, so that gives people additional time to start to change the currency versus the initial December 15 deadline. The other interesting point also is the fact that they intend to reduce the 200, 500 naira, 1,000 naira notes and focus on 200 naira notes, which in a way, I mean, it's still out there because there's still a lot of conversations around whether smaller currencies actually help to fight inflation. I mean, it's still being discussed out there by a lot of market enthusiasts and co. So there's no I would say firm decision on that. But I mean, one thing I do need to note is that they mentioned £20 as the minimum notes you see in the UK, or the most used note in the UK. If you convert £20 to Naira, I mean, using power market rate, that's about 18,000. If you are to use official rate, that's about 10,000. So that is definitely a lot more than trying to push us to 200 Naira notes. But however, like I said, the good thing they're starting earlier would give people more time to go into the banks and change their notes if they have to.
And the central bank governor did joke, about Nigerians in diaspora not spending Naira, outside the country, so they shouldn't have any problem. What did you think about that?
Yes, I mean, I agree that Nigerian diaspora shouldn't spend Naira outside the country. But, I mean, the fact that there are people who do have Naira and are not in the country right now. So, I know what they do in some developed countries would be that we would stop you from changing the old notes in the banks, and you have to go to the central bank to go and change it. Like in the UK, you have to go to the Bank of England to go and change old notes. So I want to believe that somewhere down the line, we might see that get implemented. I guess then you can ask for a lot more KYC and even limit the amounts that people have. So yes, Nigerians in diaspora don't spend Naira, but Nigerians in diaspora would have Naira over here.
Right. All right. What impact can we expect, on the fixed income market?
Well, we've seen continued tightening in the markets. We've seen liquidity very poor in the market opening, what we call short or negative, very little liquidity. A lot of people going to central bank to borrow. And at the same time, we've seen the increase in rates. So definitely we expect to see yields move up across the curve, bonds and T-bills. You have a T-bill auction today, and we expect it to close higher than we had previously, which was about 14% levels. People are expecting to close about 15% this time. But we definitely expect to see bond yields start to rise. The market opened about 15 minutes ago. I'm sure by the time we start to see runs, we would see that yields have moved up in the market.
And obviously, the MPC did raise concern over the bearish performance in the equities market. Do you see this trend continuing, or is there a bottom in sight?
Well, the truth about it is that there's a negative correlation between interest rates and equities market, right? If interest rates are going up, it makes interest rates more attractive, and people would not want to invest in equities. So if you look at what your returns are, and you say to yourself that your dividend yields in a riskier asset class, which is equity, let's say maybe about 10 or 11%, I can go and buy 1-year T-bills at 14% discount rate, which effectively will give me about 17% in terms of yield. And also the fact that if I'm buying bonds, for instance, they're tax-free, and it creates less of an incentive for people to go into equities. So I don't expect to see the equities markets pick up in terms of performance until rates start to come back down. But as long as rates remain elevated, I expect investors to plow their money more into fixed income bonds, treasury bills, fixed deposits versus going into equities market to earn lower dividend yields, and they can get in the other markets for an asset that is classified as riskier.
And obviously, we know investors all over the world now looking for ways to beat, inflation. Some have tried gold, some have tried, cash. But at the end of the day, most of these asset classes are suffering at this time. What do you think is the best mix right now to beat inflation?
Well, really, it's a tough one, because when you have inflation at 21% locally, and there are very few asset classes that you can get that would outstrip the 21% return. What I would say to you would be that it most probably how you can reduce the negative return versus trying to outperform inflation at 21% at this point in time. We've talked about the equities market, which ideally should give you highest returns, being riskier than fixed income or money market and co. But you just talked about how poorly it's performing. So I wouldn't point at anything in particular right now that I would say can outperform inflation, except you decide to go into Eurobonds market. We have some Eurobonds which are trading at 30% yield or 40%. But once again, that is distress levels, because the reason they're trading so high is because people expect some sort of default, possible default from the government. So that would only be for the strong-hearted. Beyond that, there are very few things. People say about a year ago would have jumped into Bitcoin, but we've also seen how that has performed. And besides, that is not even allowed to be traded by the bank. So I would say look at how you can reduce the negative return. You can go into treasury bills, you can go into bonds that give you effective yield of about 17% or thereabouts, or 18%, which would naturally reduce your negative real returns if you compare it to inflation to about 3%.
All right, looks like no asset class is safe at this time. Anyway, we've had the last MPC meeting, for the year out of the way. What are your expectations for the Nigerian economy going into 2023?
Well, I think for now it's still going to be challenging. We've seen GDP forecast for next year. We've seen where inflation is. We don't think inflation locally or globally totally disappears. So I still think going into next year, It's still going to be a challenging one. We are waiting to see, or we are hoping that the election brings about a change or brings about new economic policies, different thinking, and then change things. We know that going into next year, a lot of uncertainty in the run-up to the election. So naturally, that might further slow things down. But if you have a successful election, each free, which I expect, then you most likely see a bit of a bounce post-election, which tends to happen almost every year. And then you hope that whoever becomes the new president is able to formulate policies that lead us into, or lead us to take us higher grounds or have a better performance. So I think next year, start off, you have quite a bit of uncertainty based on elections, and then post-elections, you tend to see a bit of a boost to the economy. And then from that point on, we hope that, like I said, whoever comes in brings in good economic policies. I mean, what we've done so far is trying to study the economic policies of the three front runners and trying to know what to expect if any one of them wins. So that helps us position for post-election next year.
All right, all eyes on the next CEO. Thank you so much. That was Nnamdi Nwizu, co-managing partner, Commercial Partners. Thank you for your perspective on the show today.
My pleasure. Thanks for having me.
All right, that was Mr. Nnamdi Nwizu there giving us the post-MPC analysis. Well, after the break, AFEX Commodities Market update is next. Do stay with us. This is Business Morning. Welcome back now for the AFEX commodity update. Now, the war in Ukraine has caused major supply disruptions and led to historically higher prices for several commodities, especially in the global space, on the back of rising prices of fertilizer and further worsened by floods across Nigeria. Well, joining us now for analysis, Kamaldeen Raji, Managing Director, AFEX Fair Trade Limited, joining us from our Abuja studio. Great to have you on the program. Good morning. So the current gap in the supply of fertilizer fueled by the Russia-Ukraine crisis has changed, the scene and the price of commodities. What is the extent of this increase?
Thank you very much for this question. And it is obvious to everyone in the commodities market to have seen the impact of the hike in price of inputs at the beginning of the season. Around March, April, the price moved so significantly, and it's indirectly affected the rate of cultivation because indirectly the cost of production for 1 hectare, for 3 hectares, was what was spent on 1 hectare in the last season, and that has really affected the number of hectares that was cultivated. That has affected the number of hectares that farmers were supposed to apply fertilizer, use seed, and other things. And in the sense of this has really affected our production for the year. And production against consumption has been at a very long gap. And we are speaking to about 14 to 15% gap in production as against our 2021 that we have over 12 million metric tons of maize. But this year, what we are looking at is around 10.6 million, which is a big one. And that will indirectly affect the price of commodities in the market because commodities will have, people and processors will have to definitely scamper for what is limitedly available in the market. And that's going to impact the price of commodities too. So the poultry sectors and some other processors who are major users of maize will have to really run to the market by at the right time and be able to meet up with their demand for the year. And, as this affected the price of production of maize, it has indirectly impacted in the positives the production of soybeans because it has increased soybeans by like 7%. Although our consumption and demand for soybeans is still not at par, even at that increment. For sorghum and some other commodities, we are like the largest producer of sorghum in Africa, but yet, there is a limitation to the processing side of it, and it's just limited to one side of the business, and everybody just needs to start looking at what to be done, what to do, and how and when to go into the market for right placing.
But post-harvest losses is obviously a worrisome situation that threatens food security in the country. In what ways, is AFEX trying to limit these losses?
Yeah. Post-harvest loss is accruing to like 40 to 50% of our production from our smallholder farmers in Nigeria or Africa as a whole. And what we are doing at AFEX is to deliberately invest in a storage facility in key grain producing communities across Nigeria. And that is to say, we limit the distance gap between production sites to storage. And what we do in this case is that we first met with farmers, put them into communities of their own, and organize them in cooperatives and cells. And that cell simply means that we have cooperative of 20 to 25 people in 25 cooperative societies. That makes a cell, and give that to a field extension officer who take charge of them and be able to manage them, teach them the best agronomic practices, link them to a storage facility that's not far away from them, and that should give them 2 or 3 accesses. One, it gives them the access to storage at the right time. It reduces their cost of trying to say they want to establish a personal farmer warehouse where indirectly they cannot maintain the best practices as against what is needed across the globe. And at the same time, it gives them the opportunity to assess market at the right time, at the right quality. So what we did was to establish from over 150 warehouse facilities across major producing communities in Nigeria, and today we have storage capacity of not less than 470,000 metric tons, which is helping farmers to assess. One, when you store at the right time, you get your bags graded, you get a warehouse receipt, and that warehouse receipt can serve like a collateral for you to access financing from AFEX or to access financing from our partnering organization and be able to meet up with your daily demand. And at the same time, that can afford you the opportunity of a forward contract, and you'll be able to sell against time or future. And at the same time, you get to be on the global map for selling the right quality, producing the right quality, and maintaining the right quantity.
And recently, AFEX launched its Grain Enhancement Center. How will this impact post-harvest?
Yeah, that was a big one for every one of us, especially from this part of the world, that a quality enhancement center came up in Nigeria, and we are like reintroducing Nigeria back to the global map. And that is to say that we are bringing to farming communities, smallholder farmers, a quality enhancement center that can help them to locate the market in the world at the right specification. And the essence of this is that whatever you are bringing in, and it's being cleaned and maintained at the right specification, can access the market at any time. The global market has a specification to whatever they are picking at any point in time. It brings more money to the farmers, and it puts the farmer at the right channel of food supply chain. Indirectly, what is done is that we have been able to increase our traceability to what we do. And farmers, our local farmers who we all believe they are local farmers, are on the global chain, telling the world that they can get it done better, they are doing the right thing, and they can increase their production. Because it will increase their production because in whatever they are being produced, and they have the right type of market to sell at the right time, they will definitely not plan to leave the rural area for any urban settlement, and they will continue in their own preoccupation. The essence of establishing this quality enhancement center is to make sure that whatever farmers are doing in Nigeria is getting the right type of appreciation, is getting the right type of market, is getting the right type of attention across the global food chain.
And the Russia-Ukraine, crisis has definitely loomed, and we felt the effect, this season. If it persists till the next season, how can, farmers get around it?
You see, this crisis that is going on between Ukraine and Russia is really telling on a lot of things, not just agriculture. If you check the food supply chain and food consumption balance table, you see that a lot of things are missing. And for farmers, smallholder farmers, major component of the raw materials needed for fertilizer production are sourced from that area, especially for this part of the world, sub-Saharan Africa. if this continues, it means the price of fertilizer will continue to go on. And the implication is that the price of commodities will continue to increase per time. And this will have a very big impact on Nigeria and the world as a whole, because the population is growing. Not far away, like recently, like last week, it was announced that the world population eats 8 billion indirectly. And if our food production cannot match up with consumption, then there's going to be a bigger problem. I think the world organizations need to all come together and be able to find a lasting solution to what is happening between Ukraine and Russia, and that would definitely have a ripple effect in agriculture and some other sector of the world.
All right, thank you so much. That was Kamaldeen Raji, Managing Director, Afex Fair Trade Limited. Thank you so much.
Thank you so much for having me.
All right, so, we're still going to try and get analysis for performance at the exchange there. We have Omotala Akongbe, Market Data and Research Analyst at Afex, to bring us up to speed. Hello, thank you for joining us.
Hello.
All right, looks like we can't get Omotala right now. All right, so that's it for the Afex Commodities market update. Or let me try again. Omotala, do we have you now? Hello, Omotala. All right. I tried again. It seems that I can't get Omotala right now. Well, that's it for the Afex commodity segment. We'll take a moment now. When we come back, the markets are next. Do stay with us. Welcome back. Still watching Business Morning live on Channels Television. Let's head to the markets now. We have Willie Bong with the details. Will, great to have you. Post MPC.
Yes. Were you expecting that, laddie?
Well,
100 basis points.
100 basis points. I guess every analyst in Nigeria expected that.
100 basis
and
points.
It did happen.
Some expected 50 basis points. We did have people in the 9%, 9 members voted for 100, 2 voted for 50. So
just 2.
But majority carried the votes yesterday. But we're still hoping probably the CBN is going to tone down, like lower, decelerate instead of accelerating.
Hopefully, inflation actually listens to the central bankers.
hopefully,
the battle rages on.
But let's see how the fixed income performed yesterday, following, post MPC. But, they did close before the MPC results came out. So let's see how markets traded before the MPC results actually, the outcome of the MPC. So we see the bond market yesterday opened the day on a very quiet note. We saw investors awaiting a decision of the MPC. We saw few demands on the 2026 paper, on the 2025 paper, 27. Basically, we had lower demands in the fixed income space in the bond market yesterday. The quiet sentiment persisted for the entirety of the trading session. We saw market participants maintaining a cautious approach due to, likely change in the monetary policy rates, and which we saw yesterday. Now, average yields increased slightly by 5 basis points across traded papers. Now, despite look at the NTB auction, market, despite the OMO maturity of 40 billion naira, the Treasury bills market still open on a quiet note as market participants traded cautiously still because of the MPC. And yesterday at the MPC meeting, the Central Bank Monetary Policy Committee raised the MPR by 100 basis points to 16.5% from 15.5%, which we're currently at, while retaining the CRR at 2.5 and the lending rate at that's the lending rate and liquidity ratio at 30%. But we're going to talk to Chuka Nwachukwu, who is the group head bonds trading UBA, to give us more insights as to what the market was expecting and if the market is going to react to this. Good morning, Chuka. How are you doing today?
Good morning, Will.
Chuka, the central bank MPC raised interest rates. We're talking about that again, and we saw 100 basis points to 16.5. Was that what you were expecting, Chuka? Because I know you had different thoughts.
Well, we expected hike in interest rates, like you mentioned, but I didn't think. I wasn't expecting. I was actually expecting about the 50 basis points. So 100 basis points is quite surprising to most of the market watchers. But again, it's in line with the CBN strategy, and then the CBN believe that the more the hike rate, the more inflation figures are being addressed, and that's obviously why they have done that.
Well, this, no doubt, has raised the cost of borrowing even further. It's going to be difficult for businesses to probably thrive at this moment, So do you think the FG, when I look at the FG, it has a huge budget deficit. Will it be able to borrow more from the domestic market and keep rates above inflation? Would it perform, more than inflation right now and make investors happy in this moment?
I think that the good side of it is on the fixed income side, where you have obviously with this increment in MPR, you have obviously increment in the yield, especially on the CBO side, the bond side. So that way, government is able to borrow more because they will make the yield attractive, and then investors will want to come in. But the other side of it, you will find that it will cost government more in terms of making in terms of debt GDP ratio. So it will cost them more in terms of making provision for debt. Then that will probably not be too good, especially with the complaint about the high cost of debt.
Chuka, can you hold your thoughts? We'll just take a quick break. When we come back, you give us more of that analysis and more of your insights right after break. This is Business Incorporated. Welcome back. I actually jumped the gun earlier. It's actually Business Morning. Business Incorporated is much later at 1:30 p.m. Join us live then on Channels Television. But we're going to go back to Chuka Nwachukwu, is a group head fixed income that's bond trading at UBA, to continue what he was saying and to give us more insights on the CBN's decision and how it affects the federal government's borrowing and the borrowing costs for other individuals. Good, Chuka, are you still there with me?
Yes, I am.
Okay, Chuka, could you just finish what you were saying, and then you go on to tell us how we're going to see the NCB auction play out today?
Okay, so I was actually saying that, it will affect the government in terms of borrowing. On the positive side, it will bring in more investors in terms of, especially on the fixed income side. Will attractive youth, you will see a lot of interest on that angle. But again, on the flip side, it means that government will have to make provisions for more debt, because the high cost of borrowing on the fixed income side, of course, will affect government debt management. That's just the negative aspect of it.
We'll just hope that the government and the central bank are able to work that out. But how do you see the MPC decision influencing investors' buy at the Treasury bills market auction later today or today?
Yeah, so we're going to see the first test of this decision today. Today there's an NCB auction about 213 billion is on offer. The last time we saw a decline in yield, from 14.5 to 13.99. But this time around, the parameters are different. Firstly, the MPC decision raising the MPR by 100 basis points. So we're definitely going to see that play out at the auction today. Secondly, the last auction, the system was awash with liquidity. And so we saw a lot of people trying to, manage their liquidity by, playing heavily on the auction at that auction. So this time around, the system is quite very tight, and so we don't see any of that play out. But however, we see an increment in the yield at this auction, probably around 14.5 or if possible around 15.
Thank you so much, Chuka Nwachukwu, Group Head Bonds Trading at UBA, for sharing those insights with us, and we'll look forward to how the market closes today. So we're going to close off with the equities market, where we saw a 0.6% jump in yesterday's trading session. It moved higher, taking the all-share index to 44,929 points. We're inching closer to 45,000 level. Now, 24 trillion naira mark, that's where we're at. Volume activity chart was mixed, not so much happening there. Volume was down much lower than what we had on Tuesday. What we had on Monday. Value was 3.85 billion naira and deals 3,384. Now, performance across sectors was broadly positive. We saw all a sea of green there. Banking was up. Consumer goods, all in the green, and we know that market investors had a really, really strong positive sentiment in the market. We saw 26 stocks gain yesterday, against 6 losers. That's a very good sign that the market is really picking up, and despite the MPC results, and we're hoping to see that maybe the cautious trading doesn't take place after that. Ladi, if you look at the NASD markets, that was unchanged from Monday's trading. It remained at 711.91 points. Market cap is still at 935.46 billion naira, still struggling to meet the 1 trillion naira, $1 trillion naira mark we are used to having on that board.
All right, well, for the equities market, analysts say, it's on a downtrend, and we do always get those bear market rallies.
Yes, we do.
Once in a while. Let's see if that's one of them. Thank you so much, Will.
You're welcome.
All right, that was Will there giving us the details for the NGX and other markets there. So now let's move on to other markets. Talking about Bitcoin there, we're seeing a stronger performance this morning with Bitcoin, but it's still extreme fear. If we look at the sentiment in the market, fear greed index there, 22 points of 100, still in extreme fear, and it's looking like it's going to stay here going forward with what we're seeing with the contagion risk with FTX. The market cap up 5.22% this morning. Volume traded just minor 1.34% uptick there. Bitcoin dominance 38.60%. Let's flip over to the price of Bitcoin, 16,474,000 there. It did get to 16.5, but so a bit of a pullback there. Up 4.90% this morning. Volume traded $32.32 billion there. Double. We see price of Ethereum there did manage to hold that $1,000 level with the sell-off we saw, in the market there. That's up 6.42%, a bigger jump compared to Bitcoin. Volume traded $12.19 billion. That's the volume traded for Ethereum this morning. Now let's look at the top also market cap. We're seeing big jumps also there. BNB, the biggest mover there, up 7.26% at $272.26 per coin. That's Cardano also getting a boost at 32 cents. That's up 4.40%. We see eCash and XRP there, both up over 6% this morning. And we see XRP still have that issue with the SEC in the US. And that's helping to boost some confidence with this coin here. At 38 cents, getting back a bounce from the 35 cents level it hit with the sell-off you saw in the market. So traders still watching, this one to see how the SEC case actually plays out in the US. Let's look at the top gainers this morning there. We see curved out there up 42%, 64 cents. We're seeing, big jumps with most of these alts. Looking at the market there, once Bitcoin gain some kind of momentum in the market, we see bigger gains with the altcoins there, as we've seen curved out. Litecoin, one of the oldies in the market, $8.18. That's up 29.46%. And we see Dash, another oldie, in this market. These are token coins from about 2016 and far back there, $43.15, up 23.12%, and CVX $4.07, up 15.72%. So we're seeing double-digit gains, for the top gainers this morning. Top 5 losers there, we see BNX $145, down 9.36%, and a double-digit gain, and a couple of losses there with some stable coins, showing that traders are moving out of most of these stable coins and trying to get more liquidity in the market, jumping into risky altcoins there at this point. So we still have that contagion risk with FTX still weighing on the market, but obviously it's still a market on a downtrend, still getting some of those, bear market rallies, just like we see, in other markets. All right, so that's it for the markets, and that's it for the show today. Thank you so much for watching. Don't forget to join us on Business Incorporated, 1:30 for more updates and developments in the world of business. Remember, you can watch this again and all our other shows on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can see all our other productions. Thank you for watching. I'm Ladi Williams. Bye for now.